Hi, I'm Carl Buell and I'm a partner with Continuation Capital with a short video answering the question, why should a company use Regulation A to raise capital? Why raise capital using Regulation A? Let's take a look at it at the 10,000-foot view. IPOs are unavailable for small cap companies. Large companies can use an IPO or initial public offering to raise capital. Companies like Microsoft in the past, Intel, recently Uber, Lyft. There are many different opinions about criteria for staging an IPO. There are three that are probably the most important. First, the company needs years, if not decades, of growth potential. I'm not talking about historical growth. I'm talking about the ability of the company to continue to grow over the next year, several years, and decades. Larger markets do not reward standing still. Secondly, you need the ability to set analyst expectations with an accurate forecast. That can be for the next quarter, for the next 6 months, for the next year. Setting those expectations with analysts and then having the company deliver on those expectations is absolutely critical to maintaining a positive stock price. Third, the company needs to be large and stable enough to survive unexpected risk that can come from anywhere at any time. Generally, smaller companies just simply don't meet those criteria, and that's why we say IPOs are really unavailable for small cap companies. But that's why we like Regulation A. We think of Reg A as an IPO light. First of all, it's an exemption to registration, so it's easier, faster, fewer regulatory issues to deal with in order to get to a qualification statement. Secondly, it's still reviewed by the SEC, which provides an assurance to your investors that the SEC has looked at the investment and passed judgment on it to get you to the point of being qualified. That enables you to access significant growth capital by reaching public market investors. So why is that important? First of all, it gives you access to a broad investor base. If you're raising $10 million, what is the probability that one person or one company will write you a check for all $10 million? Well, probably zero. So what's the probability then that you will find maybe two investors who will each write a check for $5 million? Better than finding one investor for $10 million, but still probably close to zero. That's why accessing public markets through the Regulation A enables you to reach a broad base of investors who will invest at smaller levels. That might be 10,000, 25,000, 50,000, it could be 100,000 or more. Given that your small cap company doesn't qualify you for an IPO, a Regulation A will enable you to reach your investment goal easier and faster than you could with private investors, and given that you don't qualify for an IPO. That will enable you to increase liquidity with cash in the bank and give you capital for business development to accelerate growth and expansion of the company. Caveats about this video: do not make decisions based on this information. I am not an attorney, and information in these slides does not constitute legal advice. Please do consult your SEC attorney. If you do not have an SEC attorney, we would be happy to recommend one to you. Send me an email to carl@continuecap.com. Thanks for watching.